What is your sense as you are headed towards that very important OPEC meeting, because all eyes are on that? What are you anticipating? Do you actually see all OPEC members on the same page? Because Saudi Arabia quite clearly has said that they're not going to be the only ones to cut oil output going forward.
Well, I think there's so many different moving parts. More importantly, where does the Saudis play? Where does Russia play? And of course, the US shale production. You would have to think that at the current point in time, crude prices have been hit massively to the downside. There would be a fear amongst OPEC members that is there going to be a continued slide to 45 for WTI and possibly sub 55 for Brent in the short term leading up to Christmas, which could create, I think, major panic and further suggestions that you could see further softening. So there's got to be a collective stance across the OPEC members as far as those production numbers, and get a wake-up call to say, well, look, this is where we need to be. We're happy with, I think certainly plus 50 and plus 60 for the respective benchmarks. And it's going to be fascinating how it plays out due to the G20 this coming week in Buenos Aires and what impact President Trump has as far as the China trade issues.
Oh, well, yes, G20 meeting is going to be yet another important event to watch out for. But Peter, most global banks now have started coming out for 2019 crude forecast. And at least for the first half of the next year, the expectation is that we might be looking at Brent between $70 to $75 per barrel. What is your own sense? Do you see that much of a rebound come back in case of Brent?
Well, we may do in the, in the first quarter, I would say probably from February or March onwards. But that's a very, very strong move to the upside, remembering that it was only a couple of months ago that you had these, the large houses saying that you possibly may see an $85 to $100 barrel price range. And that's certainly been hit very, very strongly to the movement to the downside. I wouldn't be surprised to see the hedge funds enter the market again, and you're going to see, once we do see a stabilisation in price, there could be a push, further northwards. That's not uncommon for crude in those early months of the year to see, move forward. Time will tell, but one thing for sure, we're going to see, I think, large price swings over the coming months, and that's wonderful from a trading perspective, certainly different to a production, but from the trader's perspective, I think crude's going to be very much game on.
Oh, well, big swings in crude oil prices is something that has been the fact in last many months now. But Peter, with Saudi Arabia, Russia, US producing at all-time highs, what is your sense on how much will they need to cut to ensure that a balance between demand and supply in the global markets does come back?
Whilst we've got those, those forecasted numbers, we've also got the capacity probably for a little bit more production to come out of the US to make of any shortfalls. And you've got a president over there saying, well, look, he doesn't want to see those strong dollar-valued crude pricings because it impacts very much the Western economies and really any emerging markets as well from the inflation side. So I really don't think we're going to see back to those $85 to $100 forecasts. And if we are successful from a production side to see those cuts and for pricing to remain, on those numbers that they're saying, the 70 to 75, possibly OPEC will be very satisfied leading up to the next meeting, which will be mid-year, or the next major meeting will be mid-year in Vienna.
Oh, well, absolutely. But just before we let you go, that's all about the crude oil prices, Peter. One quick word on the metal space, because as you mentioned, the G20 meeting is going to be an important event to watch out for. And today, of course, we are reacting to the US, US Fed chairman's statements and the US dollar impact as well as all being seen. But as we get into 2019, how do you view the precious and the industrial metals?
The sell-off has been absolutely dramatic this year. You're down plus 25%. And that's a wake-up call, to see that move so solid to the downside. What impact is that having to the Chinese consumer? What impact is it having to Chinese production as far as building and of course the demand side from the global commodities. So and base metals and so on. So that needs to be closely watched leading into 19. Are we going to see a global sell-off as far as equities? Where does Jerome Powell, the Fed chair, play in December, and do we see 3 rate rises next year or 2 or 1? Everyone's got a different opinion on it, and I think that all these factors need to be considered also, which will greatly impact the base metal prices. Keep an eye on gold. I think that's been fairly range-bound and flat over the last week or two, but it's back at 12.20. It could be bid up, and I think that that's always a bit of a wild card.